Hello student, welcome back to IBS. Today is our lecture 3. We are going to discuss about balance sheet overview. So basically this is not overview. We are going to learn each and every line item in depth and their definition, their meaning, their uses. Okay. So let's jump to the topic and understand it one by one. So first of all, we have balance sheet. What exactly the definition of balance sheet? Okay, so balance sheet is known as a statement of financial position. The balance sheet provides a snapshot of company asset, liability, and owner equity at specific point in time. The point in time is important here. The specific point in time is very important because so balance sheet are normally prepared particular date. Okay, maybe 31st of March. Okay, maybe if it is preparing for quarterly, so 31st March, 31st June, like this. Okay, or if it is for calendar year, that will be 31st of December. Okay, so like this balance sheet are being prepared. So based on this date we will prepare our balance sheet. We will try to post all kind of entry, all kind of adjustment, and we follow all the gap and etc, and expense and revenue and asset and liability, everything will be recognized based on this date. So that is why balance sheet is giving the position of financial health of the organization for that particular date. Okay, so this is the basic definition of financial statement. What is the purpose of balance sheet? So company want to know how much asset we own, how much we have. Okay, this is mine, and what we own from others. This is others property. Okay, and the owner equity, what is being invested by owner. Okay, this is the balance sheet. This side is your asset, this side is your liability, and this side is your equity. This is the investment. Equity is nothing, just a liability, because company is separate entity than the person. Okay, so if suppose you are a company, okay, and I'm your owner, I gave you money, so for you this is liability, right? But in your balance sheet you will mention him is a different name as an equity, whatever x amount. So I have given you this to run this business, so that is why you as an entity, artificial company is artificial person, so you are a company and you are running this business. Okay, so for you it is nothing, just liability. So these two side are liability, this is your asset. So purpose of balance sheet is to know how much asset we own and how much liability we own and how much equity we own. Okay, this is the three things are available in balance sheet: structure, asset, liability, and equity. As I explained just now, characteristic balance sheet represent the snapshot. And proprietary theory, net asset are viewed as belonging to the owner. Okay, and permanent account, balance sheet has whatever account, those are permanent account. Asset and liability and equity, these are permanent account that doesn't change. For income statement, whatever revenue you have earned, whatever amount, and the expense, and then the net income, whatever the amount. Okay, that amount will go to the equity section of reserve side, and then this account all are not permanent, so everything will be wiped out. Next year what will happen again, whatever entry you will post, the fresh amount from 0 to till the closing period amount will be added here. Okay, keep on every day wise it will be added, expense will be added, and again net income whatever will come into next year, that will again go to your current year earning. Okay, then current year earning will convert into your retained earning. Okay, or a reserve you can say. Okay, or if company want to pay those amount to their investors, so it will move to equity section. Okay, so this is the overall view of balance sheet. Make sure to remember this is permanent account. Okay, and one more important point with regard to that, balance sheet does not determine the value of business. Okay, is not calculating the enterprise value or business value. Okay, this is just giving the financial position as of date, a specific date. Okay, position, okay, with regard to their asset, liability, and owner equity. We'll move to the next slide. So now we will discuss about the asset. What does asset mean? Asset is something you own. Okay, or kind of property, land, building. Okay, your cash, kind of stuff. So these are the thing are your asset. Okay, anything which is your own. Okay, physically or non-physically, for that you will get benefit in future. Okay, future benefit in terms of economic benefit, in terms of cash, in terms of some other kind of benefit. Okay, anything you are going to get it in future, and this is because of past transaction. What does past transaction means? You have buy a land. Okay, for that you must have paid cash or something, so there is a transaction. Your from balance sheet point of view, cash is here in current asset and fixed asset is here. Okay, so X amount of current asset you are having, you minus the B amount. Okay, and then you purchase that asset for B value. So your asset will be added to as an B value, and your cash will be removed from X minus B. So your value will remain here X minus B. Overall, your total value will remain as it is X. So whatever you are having here, that is converted to fixed asset. This is just a transaction. You have not lose anything, you have not gain anything as of now. Okay, but this, since you are going to get benefit in future for more than 1 year, okay, longer period of time, that is why that is fixed asset. Now we will talk about the characteristic arise from past transaction. Currently we own this. Okay, arise from past transaction and provide future benefit. Provide future benefit. This is the definition of asset. Now if we talk about liability, future sacrifices of economy. Okay, in future we are going to sacrifice cash or any economic benefit. Okay, in future. Okay, currently what? Currently we have consumed. Okay, we have consumed the benefit or whatever it is. Okay, so that is why when we have consumed something, so we have to pay for that, right? If you have ordered food, okay, so now you need to pay, so that is the payable amount is your liability. Okay, so future sacrifice, so in you are now you need to pay in, but currently if you have not paid but you are going to pay tomorrow or maybe after some time you are going to pay, so in future currently you have not paid. Okay, as of now you have not paid, but in upcoming month, upcoming day you are going to pay, so that is the future sacrifice. What you will sacrifice? Your cash. Okay, and what you will get in return? You will return any item, raw material, any benefit you will get. Okay, for that you are paying cash in future. Okay, this is just opposite of your current asset. Okay, due to present obligation, this is the present obligation. In future we are going to sacrifice, and currently we have consumed the benefit. Okay, character result from past transaction. Okay, currently on. Okay, and lead future sacrifice. In future we need to pay. Currently we own, either we own this food or we have consumed the benefit. Okay, whatever it is. Now if you talk about equity, as I told you, this is the owner money. Okay, given to company, so company will consider it as an liability or equity. So basically they don't say it is liability, they always say it is equity. Okay, residual interest in asset after deducting liability. Okay, represent ownership interest in the company. Ownership interest of the company, how much ownership interest owner has, that is called equity. Okay, in future you will get interest for what? For your investment. Okay, after deducting current asset minus current liability, so whatever you will have, that is your equity. I think we are done with this. We'll keep on learning more with regard to equity and all when we will be going detail about the type of equity kind of thing. Okay, we'll see you into the next session. Stay tuned. Thank you very much.